Hey, what's going on, everybody? We are live for Financial Fitness Friday. Welcome. Sorry, I know the last couple of weeks it's been a little sporadic. I've been traveling. Dave's been traveling. Um, Prior to coming on here, Dave was asking me like, "Hey, why aren't oil shooting up, right? Because of the war. That's obvious. Oil is typically much more reactive than a lot of the other items, especially when there's a lot of geopolitical tension." One of the things that I'm being asked, or Dave want to know, is why hasn't gold shot up? Well, gold is up. It's almost at all-time highs right now. So is silver. So is everything else, and precious metals. But a lot of times markets look ahead. Okay, a lot of times certain things are priced in, right? Now, obviously, like if you look at the tech, some of the stocks that are like Lockheed Martin, they get a boost anytime this stuff happens, but people have been buying in anticipation for this, right? So the market's usually pretty good at anticipating, usually 6 months in advance. Does that make sense?
Yeah, futures.
Yeah. And so what I would tell you guys is like, there's going to be a lot of volatility. Okay. This is why when we talk about, budgeting and having savings and investing, this is where all that comes into play. And it comes into play in a major way because when you have the savings, when you have money to invest, you can take advantage of certain opportunities, right? And it also helps when you have all this market volatility. Dave, does that make sense? Does that answer what you were
Yeah,
asking?
100%. Like, yeah, it's crazy what it's done over the year, even the last 6 months, even the last month itself. But my expectation was, obviously war, hot war, whatever you want to call it. Um, when things fluctuate like that, it's like they say in the stock market, right? You gotta have a winner and a loser. So
Mhm.
what's usually the winner in this case? Well, if things are inflating, especially oil, usually, correct me if I'm wrong, precious metals usually correlate to that, correct?
Yeah.
Or tangible items.
Well, those two are going to be impacted by the dollar, right? That the reality is not only is that supply demand, but it is also in relation to where the value of the US dollar. Okay. And you could also include crypto in there. So think about it like this: as the dollar weakens, crypto goes up.
Mm,
Okay. Or really, it relatively could stay the same. Oil goes up, precious metals go up, right? So it's supply demand on that market, but it's also what is it in relation to the dollar? Is the dollar going up or is the dollar going down? All right. And you could say that a lot of this is happening. I told you guys one of the biggest threats was BRICS. Okay. And them having a currency that is backed by assets, unlike our dollar, which is not backed by assets. Okay. And so when this started happening, it's kind of funny that it's against BRICS countries and people that were in BRICS. Why? Because we need to protect the dollar dominance. Otherwise, the economy that is built on a house of cards collapses. Okay, so you can look at this many different ways, but that is a key driver here. All right, and I'm not saying it should be. I'm not saying it shouldn't be. I think generally war is not good. Okay, but that's what it is. And if you go back even 3, 4 years, remember when I kept saying, "Hey, the economy isn't where it needs to be. The economy isn't where it needs to be," even though the market's going up. The only way out of this is what? What did I say?
war.
And how long ago was that? You could go back to the episodes, dude. We've been doing this 2 years.
Yeah, bro, we've been talking about that since day one. Like, you knew something was inevitable. Why? Because wars, whether you like it or not, wars are essentially good for an economy, but whose economy, right?
It's
So
it's not the main guy. It's not the business owners. I can tell you that. Okay, because this makes everything more expensive. Absolutely everything.
yeah,
It
it's
costs.
it's
Think about it
false
like this.
artificial inflation, right? And makes
Yeah,
it
well,
good.
a little bit, but think about this. It costs you more to get your product shipped to you. Okay, it costs you more to ship your product out. It costs you more to have your guys run service calls. Okay. Everything increases. Those price increases, they're either one absorbed by the business, which some entrepreneurs are doing, but you can only do that for so long. Okay. Or they get passed on to the consumer. Is the consumer making more money in this situation?
No.
No. Okay. The consumer is not making more, money in this situation. So what does that do? It's making people pick and choose what they can buy, what they can't buy. All right. Which means that entrepreneurs do not have the same type of economy to sell into. Right. And so you have companies that can adapt and go all the way upstream. And then you have companies that are going to start to struggle or flounder. And it's all created by this. All right. And the companies that can adapt the fastest, right? Yes, you're going to have to raise prices. You can't, but don't raise prices without giving an insane amount of value, right? If you're taking care of your clients are becoming your best word of mouth marketing. You can still get through this and not only get through it, but be stronger and thrive on the other side of it. All right. But it is making it a much more challenging environment. It's making operators compete, and it's making them sharpen all of their skills, because those are the operators that are going to function. Those are the operators that will grow or at least maintain where they're at. And then hopefully when everything lets up, be in a much better position. It is not an easy environment at all.
No, it's not. We had a local real estate meetup last night. A friend of mine was speaking, and like something that really correlates, that tells you where the dollar stands. Back in the late 70s, early 80s, when interest rates for mortgages were 17%, right? But you could make a bank or a savings account deposit or even a CD deposit, and you were getting at least 8, 9, 10%, 15% on that in the bank. You're not going to get that today, right? No. You won't even get 1% now.
No.
So you see exactly that shift to where it is. It's like you were talking like, hey, everything is going up, right? You can't compete with that. At least back then, when the dollar had some value, you could have high interest rates, but everything else was keeping up with it or even beating it.
Yeah. Yeah. And you're going to keep seeing that, guys. There's just no way around it. So it's who can navigate this the smartest, who can keep getting better. What's going on, guys? A lot of guys from YouTube tuning in, especially one from Philly.
What's up?
Yeah.
215.
That's all Dave for you. I'm that New York to Tampa connection.
I'll be there on Saturday, actually.
Where?
Down in Philly. I'm doing a live podcast talking about credit on Joe Scarice's Creative Burr Strategies podcast.
Oh, nice.
Mm-hmm.
Yeah, and also you see it in like real estate too, right? And the supply demand there, and as this market softens, you're going to see more properties get listed. Mm-hmm. I think there will be some fire sales. Absolutely. Unfortunately, just the way real estate works, I'm forced to make a move in the next 30 days on something. So just because of some of the properties I sold, mm-hmm. and that through a 1031 exchange. So that's
running out of time on it.
Oh yeah. Yeah, but my partner located a much larger property. I mean, much larger, right? Kind of a complex.
Yeah.
I think it's a pretty good deal. I don't love the financing structure of it, but as long as it's temporary, it should be fine.
Right.
What else you got, Dave?
Nah, man, that's pretty good. I mean, I think overall, looking at the last 6 months, yeah, everything's boomed. I mean, gold's still at 5,200. Silver's almost back up to $90 again. Just in a day, Bitcoin went up 4.5%. So I think you're starting to see some move. I think my guess or speculation could be, and your take on this, people just holding stuff just to see and be like, hey, is this going to go up, instead of making some moves or shuffling some stuff around?
So my thought, if we're talking about that in Bitcoin, I actually think you got way more on the downside right now. Okay. What I'm doing is I'm just weekly buys. That's it. I do think you're going to have some pretty big drawdowns coming soon. Because here's the thing, and this is from a technical standpoint, and it's from historical. when it stays under that 200-day moving average, as long as it has, you typically get some really big drawdowns. Those are absolutely the best opportunities to buy. Like if you can catch it on a 10% drawdown, right, and put a lot in there, a 5% drawdown, put a decent amount in there, you will make some real money. Okay.
Yeah. I mean, for context for that, 90 days, like if you're talking Bitcoin's 19% down, or you're talking 6 months, it's down 37.
Yeah, I'm saying the big daily moves, right?
Gotcha.
That's what I'm expecting. Right now it's hovering. And if it breaks out of this range to the upside, yeah, it might go back to, let's say, 80, right? But if it breaks out of this to the downside, you might see low 60s, even 50. Okay. And that might mark the bottom of that cycle, or it may go even further, right? The point is, when you see the extremes, you want to play the extremes. If you see a ripper of an up day, it's not terrible to unload. If you see a rip to the downside, and when you think you're getting to the bottom of that cycle, that's the best time to buy. All right. Hey guys, well, listen, I know Dave's got to run. Okay. We will be here on Mindset Monday. I have no more travel for a little bit, which is nice. And yeah, appreciate you guys for tuning in. Share this with someone that needs to hear it.
Be great, y'all.